Hello everybody, welcome. McMac88 here, and I'm going to talk about, well, you got it, preservation of wealth. And this is going to be my presentation of when the precious metals are a great time for preservation of wealth and when they do not hold up to those words, because no asset class will always be at any specific time a preservation of wealth, as everything is in a cycle, up and down. It's basically a time bomb. You got to know when to get in and get out in precious metals. And I'm sure pretty much about all the other markets, stock markets, they have their crashes. So if you see that starting to crash, if you cashed out and bought back into it when it was low enough, then you pretty much did pretty well. But this one I'm going to start off with Trainwreck 1993, and he was the only one that responded basically to give me any information about when gold or silver was a preservation of wealth or even a collapse savior during that time, in any time frame. I'm not going to go really into what he said because I pretty much deserved what he said, and I'm hoping that none of this stuff ever happens ever again. Even when I didn't deserve in my other videos from a year or two, people still put this stuff up. It's terrible. But anyway, so he opened my eyes that an historical fact that people that own gold stocks during the Great Depression saw a 500% increase in their investment. You don't know shit. Well, yeah, about gold stocks, I sure the hell didn't. And I'm pretty sure that most people here never knew about that either. But on my channel, and most people here that listen to me and I listen to their channels are talking about this. Okay? This is real gold, buddy. Trainwreck. Okay? This ain't a gold stock. Gold stock is not physical metal. I'm talking physical metal here, okay? There's an old saying that's true. If it's not in your hand, you don't own it. Okay? This is real silver. If it's not in your hand, you don't own it. Okay, so you were comparing apples to oranges as I was speaking physical gold and silver. If somebody had this gold coin or American Eagle back then, did it save their butt? Yes or no? And this is what you come up with. But this is what our response was. I'm willing to learn everything you're willing to teach in precious metal stocks because it caught my eye. Thank you. So he sent me a site, and before he sent me that site, I actually looked that up because I thought that was fascinating, and he was 100% correct. And this is the name of the stock that did that. The Homestake stock sold for about $65 per share in 29. By 33, the average stock price for the Homestake was $370, presenting a gain of more than 450% of the course of 4 years. The Dow Jones Industrial Average fell almost 90%, 89% in a 3-year time period from 29 to 32. But here's the real kicker about the mine stock. Okay, where is it? There it is. The dividends also skyrocketed. In 1929, Homestake paid the dividends of about $7 a share. By 1935, dividends had increased to $56, a staggering rate of 800% over 6 years during these deflation times. But by the way, after that, you don't want to know what that stock price was. You lost everything that you had it in there practically if you didn't cash out. Got to get in and you got to get out. In every asset class, nothing is going to be a preservation of wealth forever. So during these inflation times, gold stocks not only retained their value but provided significant return for investors. This is massive amount of wealth. This is what they call transfer of wealth. Okay? From the average citizens to the smart, rich investors. How many average people in that time frame even thought about putting their money in a gold mine stock? Wonder who. Wow, that's amazing. To me, that is shocking. And Trainwreck, thank you for bringing that up. I thought that was amazing. So to me, that the only way, so far from history, not knowing if it's going to repeat that way, because if there ever is another Great Depression in this country, maybe this time, this is what you need in your hand to save you. And not the stocks. Or would it be the stocks? Like history says that's what it is. The mining shares. Go figure. Who the hell would figure that one out? It's not the physical gold and silver. It's the stocks. Huh. Thanks. I appreciate that. That's why I had to share this to you. Now, back into the real preservation of wealth here. I thought that was staggering. I had to share that with you. Now to the good part here. The gold. I love gold. I'm a gold bug. So let's go to this preservation of wealth for gold, and what time frame gold was really a preservation of wealth. Like I said, these time frames here, it's all about timing. It's like a time bomb. It's a ticking time bomb. All asset classes, you gotta know when to get in and get out, especially gold and silver. That is like the biggest quick time bomb in history, literally. So let's not worry about this. This is real money. This is all real money. Even back in if they were all stagnant, okay? It's can't even own these golds, okay? So citizens couldn't even buy it. This was the legal time of owning gold. So it's all backed by currencies, okay? So forget these years. Let's go to 74 when it was allowed for citizens to buy gold. Look at the jumper right off the bat, okay? So if you got it in at 159, saw a little increase, and then bang, damn. All right, well, a little bit, not bad. But then these are the years, this is the funny part, this is when the Hunt brothers are cornering the silver market. And they probably believed the hype that silver was very rare, and if they can corner the whole market, which they practically own 50% of the physical silver on the market in their back pocket, which made silver hit its first all-time high in the 50s, okay? And gold follows, or gold is the leader and silver follows, okay? So these precious metals always follow each other. So therefore, if you would have bought in 1980 and then in 81, or these two time frames, let's say 80 and 81, like the 2011 and 12, like I got into 12 and a lot of my listeners here got in this time frame. So let's just look in this time frame right here for a little bit and see where the preservation of wealth would be for citizens at that time frame in the same shoes as us. 300. Oh man, down already. Now look at all these years, okay? 4. So all right, all right. You're almost got even from 81 to 87 in a 6-year period. But now let's see how long it takes for it to get to $600 to $400. As inflation is increasing, homes are increasing, gas prices and foods are increasing, buying of cars are increasing. Everything's increasing. Okay, this is not even backed by dollars anymore. This is actually investment time frames. Okay, now you're in the twos. So from 99 to this time frame, okay, almost 20 years, you're down massively. And I guarantee you people who did invest in gold and silver or gold at this particular time got way out before this ever happened. Okay, this is when Blanche P came in and stuff like that, where he was a smart investor coming out of school or something and said, you know what, man? What the hell? Something's got to change here, right? Too much stuff is going on. But what's to say those people did keep that gold, okay, from that time frame? Let's see how long it would take to hit 600 or 400 again of those time frames. 2000, still not a preservation of wealth. And even when this time frame, if you got in there, it's still not a preservation of wealth. So it took you 6 years from that time frame alone to see any real major increase of your wealth. It's not very good. So here we are now, 2001. Still no preservation of wealth from the 80s to now. It's over 25 years now. We're massive now. We're in 22 years, 21 years. Still, now we're in the 3s. All right, but he's still hit 4s or 6s. Still, moving up a little bit though, right? 2004 now we're in. All right, see you little 4s. Okay, so if you got it in 4 and 81, then all right, you saw your wealth you saw what you paid for the gold get to the same era. But now that's over 20, that's 23 years later. You know, food, gas, and the cost of living have gone up dramatically in that time frame. So even the prices are still the same, you still are behind on your wealth. Okay? Still fours. Don't worry, the preservation of wealth in gold and silver is here. It's just that it's not in a time frame from the time that you was legal for the citizens until if you got into 99 and waited a few years, which not too many people have the patience to do that. Okay, now you're in the 600, so now you pretty much have gotten in between. If you got in the 80s, okay, took you 2006, took you 25 years. I highly doubt that many people, if any, even hold it that long. Seriously, I wouldn't. But you, 2 decades later, you'll sell and put that money towards something else. You'll need that money towards something else, I guarantee you. Right? Most likely, after 25 years, you're retiring, you need that money to move, or forget this thing. I got my money, what I paid for it, let me get out. Okay, 2007, started picking up a little bit now. Now the money's starting to kick in now. So if you would have got in to the early 2s, or 99, when Blank P got in, and just hold on and wait, I would say about the 2002 really is kind of really where the preservation of wealth, if you got into it, is where you're really starting to see in the late 2s. You know, like, oh, you know what? For the last 25 years, it's been this price. Maybe it's time for it to pick up. Okay? These are the people that got the preservation of wealth. These are the people that got the preservation of wealth. Okay? There's a time frame where things are, everything has its time frame of preservation of wealth. And there's a time frame where things will not be a preservation of wealth. There's no guarantee in any asset class is a preservation of wealth. That is false. False. You got to pick your time frame. And now in 2015, 2011, here's the big boy. We're basically hit 1900. Okay, somewhere around here it is. September 5th was this peak, basically. Okay, so if any people around here got into it, think it's going to keep going up. And this is where Blank P should have sold his stuff. Okay, when he traded 6,000 ounces of silver into gold. If you would have cashed out that, man, and just got out of the metals instead of thinking it's going to keep going up by listening to Brother John F. or whoever else he listened to make him think that it's just going to keep going up and up and up and never come down again, as history always said, that when it goes up, must come down in any asset class. He's still got a massive amount of wealth. He's still way ahead, so don't get me wrong. I take my hat off him, but man, you know he's kicking himself in the butt a little bit by not selling everything. You know he is. You know it. And he knows it. He probably even said in some of his videos probably that he wishes he got out because he could have twice as much right now in today's market. 13, as we all know. So I don't even have to do this anymore. Okay, we all know about this stuff. But I want to do... Oh man, where is it? One video here. 2 videos actually on preservation of wealth here, on what happens if you have too much and you don't know when to get out. I'm pruning this guy here. I don't know him. He doesn't know me. He sells knives and he's making money selling knives. $350,000 in gold. So this is what $350,000 in gold and silver looked like in 2000. Oh no. Hold on. What happened to my internet? Damn it. I gotta go over again on this thing. Why is it doing this to me now? Okay. That was strange. Let me see if I can get him again here. Good. It's a 1-minute video.
Hey guys,
check this out.
Mike Snowdy coming to you live from the Gold Spot. Wanted to show you what $350,000 of gold and silver looks like. These are kilos right here of gold. They're $55,000 a piece. This is 3,500 ounces of silver. This is 21 carats. And this is the big boss. And we're here to get money because that's what we do.
See, he wants money. He ain't looking at money as nothings, paper nothings. Because that dollars gets this stuff. Okay.
And you got the Texas Tanto.
This guy makes some cool knives. So anybody that's looking for knives, wants to buy a knife or something, check him out. Okay, I'm here to help everybody out. He needs money to feed his family and go on. So there's his site. That's the site. So if you want knives, go right ahead. Now this is the preservation of wealth that he lost out on. If he still has the gold today and silver. So I'm just assuming that he still holds it. Maybe he was a smart man and said this got out of it. But I'm just saying if the gold was still around today and the silver in his hands, this is how much wealth preservation he lost. 128 ounces and 0.6 ounces. That's what each kilo is. 32.15 ounces like each kilo, and he had 4 of them. And for him to have 350,000, I did the math, so that would have to be at $17.10 each ounce, and he had $220,000 worth of gold. 3,500 ounces of silver would have to been $37.14 to equal 130,000 ounces. $130,000 to be $350,000. Today's numbers. Actually, I did this one yesterday, so gold went up, I believe, a little bit. So it's a little off, but still, it's close enough. If you still have that 128.6 ounces of gold at $12.30, that's how much his gold is worth, $158,000. If you still had the 3,500 ounces of silver, and I'm sorry, I put 37.14 down. Actually, it was like 16.83 at that time frame that I did yesterday. It was worth 69,000. So I apologize. It's not 37.14 in today's market. You guys know that one. So the price of those, or the value of those gold and silver today, is 227,000. And if you do the math between what he had and what it is today, that is $122,000 less that he lost in his wealth. That is not a preservation of wealth time. From the time frame I got into it, from 2012 and today. This is all I'm saying, that there's a time frame where it is not a preservation of wealth. So if we're going to make videos on preservation of wealth like me, let's let people know that it's not always a preservation of wealth. Is it now? It might be at 1240 or 1230, 40, whatever it's at now. It might be if it stays above. But I have friends that tell me it doesn't. I had a friend that's all into the stocks. He showed me the chart for gold to inflation rate. Blank P, put that one on there. You're a master at charts. I don't know anything about that. He showed me that right now today gold should be at $800 if it wants to even up with inflation. $800. Now this is Kevin O'Leary. This is a multi-billionaire that's on Shark Tank. Listen what he says about gold.
Long or short? Very simple strategy for me in gold. I've been in gold for decades. 5% weighting of my net worth, maintained quarterly at 5%. I own the GLDs in US Pay, and I own bullion. So I use the GLD to monitor my 5% weighting. I use it as a buffer for volatility. I never let it go past 5% weighting. I don't want to own gold because it has no yield, but I use it to reduce the volatility of my overall net worth, and it works. But frankly, I think gold will be dead this year.
He's right. 2012, the end of 2012, he predicted it would be dead, and it is dead. He doesn't want to own gold, but he has to, just to balance out all his other billions. When the dollar loses value a little bit, the gold will go up. But as you say, he never keeps more than 5%. This is from all-time billionaires. You tell him that Moneybag73, go to him and tell him that there's that all those billions he got in his pocket are paper nothings. I dare you to go up to him. That's my preservation of wealth video. That it is and it cannot be a preservation of wealth. And that's all asset class, not just precious metals. So I just want everybody to understand that if you're hearing this preservation of wealth of gold and silver in these videos here on YouTube, you're going to have to realize that Is it your time frame a preservation of wealth, or is it not? Thank you very much, and hope you enjoyed this video.